Hey everyone, Derrick from T3 here. I'm going to be reviewing an individual stock today, one that I have a position in. So I just want to throw up the disclosure here ahead of our little lesson. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. And here is the position disclosure. These are the positions that I'm in currently as I'm giving this little lesson today, which includes the stock that I'm going to be talking about. I'm going to be talking about the stock SoFi. So I do have a position in this, and I just want everyone to be aware of that. SoFi. So SoFi Technologies, social finance company, supposed to be, the future of how finance companies work. I've been trading this thing really pretty actively for a few months here. Right now I've got a daily chart up, so let's just review the recent story here for SoFi and kind of everything that's been going on. So SoFi was a little bit of a high flyer back in May and June, working its way up, and then it got hit really bad. A couple of things happened here. So first of all, you can see there was a big dip on June 25th. That was actually in anticipation of a lockup expiration on June 28th. So lockup expirations, basically any event that increases the tradable float of a stock can be problematic for that stock, or basically it's a supply and demand situation. So something like a secondary offering that actually increases the float, adds a whole lot more supply to a specific stock symbol. Well, if the demand stays the same and you got a lot more supply, what happens to stock? Stock goes down. So lockup expirations are another big one, where all of a sudden there's a lot more shares that are out there because the insiders, like employees of the company, executives at the company, can begin to sell their stake as soon as the lockup expires. So what you'll often see happen, because now, same thing, it's a supply and demand situation, you have more supply out there. If the demand stays the same, the stock goes down. And often what you'll see is in anticipation of a lockup expiration, because those happen on specific dates, as opposed to a secondary offering that could happen, could be announced by a company at any point in time, you'll often see a stock sell off into the lockup expiration. So I think that's what happened here initially on June 25th, because June 28th was the lockup. So they gapped the stock down really big. They sold it off really hard. There was a lot of volatility here for a few days. Interestingly enough, and we do see this sometimes, they actually bought it up a bit on the day of the lockup. It's kind of like buy the rumor, sell the news, but the opposite, right? They sell the stock off on expectations that the lockup's about to happen, and then it initially gets bought back up. So I remember trading it back here on these few days, and then it tried to recover, tried to regain the 20 level, failed. This candle here on June 29th we call a negative Maribozu. That negative Maribozu candlestick is a bearish candlestick. It's showing you failure to get back above 20. That was followed by an inside day. These inside candles here, after a wide-ranging bar, lately I've been kind of describing them as like a keystone candle. What happens after this tighter inside bar is oftentimes going to dictate the future of the stock. If this thing was then able to break up on this inside bar the next day, everything was probably going to be just fine. And if it breaks down, you're probably in a lot of trouble, and it could really lead to continuation of the downside. And what happened? It broke down. So if anyone was looking at this, long in this area, again, I was trading it in this area. You got to be managing your risk. You get yourself stopped out, and you can see here that increase in shares that are tradable from the lockup expiration combined with just this technical breakdown that's leading to basically a feedback cycle of selling, right? And markets often work in feedback cycles. Selling leads to more selling, buying leads to more buying, right? Just think about it from the selling perspective, like with SoFi. As SoFi is breaking lower here, people's stops are triggering. It's more selling, which causes it to go lower. That causes it to break a next important pivot point. That creates more selling, etc. So this thing really got beaten up. Post lockup expiration, it basically worked its way down from $20 down to $15 over the course of half a month or so, and that's huge on a percentage basis. Then it really tried to find its legs. Tries to create a base here at 15, eventually begins to round its way back up. I was involved in the stock in this movement higher here off this $15 base, and guess what? It's finally looking great here on August 12th. It's broken higher. It's worked its way back to $17.50. and then earnings report comes out. Interestingly enough, the earnings report for SoFi was a huge miss on the actual earnings number. I forget exactly what the number was. It was something like they were expecting an EPS loss of like 7 cents. I think it was like 56 cents. So it was a huge miss. We could talk about the why in a second, but one thing I want to bring up really quick is UPST, which is a similar company, similar future of finance type company, in the same earnings season reported blockbuster numbers. And UPST worked its way from $140 earnings right before the earnings report to here we are today at $376. So it shows you the importance with these growth companies, that they're really able to meet and exceed their numbers and their growth projections, and that they provide good guidance. The biggest issue here with SoFi on why they missed was because of their loan business, particularly their student loan business was a huge miss. And that was because the U.S. government is basically backstopping student loans. There's a government program, a COVID government program that exists, and as a result of that, SoFi's business of refinancing student loans, which is a large part of their business, it's a multifaceted company with what they're doing, that led to the huge miss in EPS. And guidance wasn't great, and the stock had a massive gap down, and all the work that it had just done technically off this base, looking like a rounded reversal here, was all out the window. And that's one thing that's really important to remember about an earnings report. First of all, if you hold stock into an earnings report, which I did on this one because I felt I was decently in the money on this point, whatever. When you are holding stock into an earnings report, it is always 100% of the time gambling. I kind of like to do that, with the house's money, if you will. I'll sometimes hold stocks into an earnings report if I'm, decently in the money on the position, with the thought process of let me risk the money that I've already made in order to potentially make more. But what happened here was that the stock got crushed on it, and that obviously, hurt me, and I gave back a bunch of P&L. I mean, this thing closed at 17.50 into the earnings report, gaps down to 15.35 the next day, and then within 3 trading sessions, they sold this thing all the way down to what has become the absolute low here of $13.56. And same thing, feedback cycles. That's one of my big themes in understanding trading. If you can understand how market participants are positioned in the marketplace, you can have an understanding of what they're most likely going to do next. Well, what did this earnings report do that wrecked the stock back down? Well, not only were the numbers not good, but anybody who had just been buying on the way up here off of this base that I just talked about it to $15, well, by the end of the first day on earnings season, pretty much every single person who had bought the stock, all of this volume, they're all out of the money. And what do people do when they're losing money? Well, they tend to do one of two things. They either sell to try to manage some risk, or they do some hoping and some praying. Please, God, please have the stock come back up. That's not a great trading strategy. So stock got completely wrecked here, based out, needed a lot of time after that, was honestly pretty out of play for the rest of August, until stock caught a big upgrade here on September 22nd. So the way that I like to trade broadly is I combine technical analysis. I'm primarily a technical trader, but I would say I'm like 85% focused on technicals, and I'm 15% focused on fundamentals. And the fundamentals that I pay attention to are not the traditional fundamentals that are taught in finance class. I mean, I will pay attention to those numbers if they're provided to me, but what I care about is the story of the stock, what I call qualitative fundamentals. I want to know, what is this company doing? How are they positioned for the future? What does the company's management team look like? What upcoming potential catalysts are there? For example, SoFi is trying to get a bank charter from the government, and that is potentially something that's going to happen in November. That could be huge for the growth of their loan business. So that is an example of a potential upcoming catalyst. It's part of the story of what SoFi is trying to do. So again, I'm combining that story with day-to-day news catalysts plus the technicals. So as it had kind of built out this sloppy range here post that terrible earnings report, you had some real resistance at basically there was like a 1550 level and there was a 16 level. So one really great trade that we had as a team in the ProDesk virtual trading floor that we communicated was here on September 22nd when Jefferies came out and upgraded the stock with a price target of $25. Now, most people know that I really don't care about analysts and their thought process. It doesn't mean that I don't pay attention to events, though, because even though I don't really care about analysts, the fact that an analyst comes in and upgrades or downgrades a stock can put that stock in play. If that stock is in play, it's going to trade with higher volume than it typically does. It's going to trade with a larger range potentially than it typically does. Higher volume, larger range. To me, that all means potentially better risk-reward trading setups and higher probability of success. So I remember very specifically on this day, we communicated a trade here of basically going long off the open versus that 1550 level and recognizing a potential add through 16 bucks. And it worked, phenomenally well. It looks like the stock on that day opened up at $15.86. So if you were buying the open versus $15.50, you're taking on 35 cents worth of risk. And then if you're buying through $16, you're probably using a smaller time frame, 5-minute, 15-minute chart stop loss. And then bam, beautiful day. I remember the follow through on this day was even better than I expected. Stock worked its way up to over $17 on that day. So beautiful trade. And then even after that, it gave about $3 worth of upside follow through before a pullback. This was a technical pullback here. Remember, the $16 level is important. It's worth noting that the market itself was also weak into the end of September. So obviously there's a correlation between individual equities and the market as a whole. So if your market is acting weak, that's going to apply some pressure onto pretty much all stocks. So the market was a little bit weak and pulled this thing back down to our $16 level. But look at this candle right here. And this was another candle I spoke about on the virtual trading floor the last day of September 30th. The stock tailed heavily below 16, but still closed more or less right at it. And I kind of liked that. And I said, you know what, this $16 level is still in play. They didn't really totally lose this level, even if it traded below it. And then you can see over the course of the next 4 trading sessions, it built out a little bit of a base off that $16, and internally, it was showing relative strength on a couple of these days compared to the market. So that was kind of the next trade that my team and I were communicating. I was trading this every single day in this area. Every day we're talking about, let's go long off the $16 area. I remember very specifically using the low of this bar here on October 1st, $15.75 as a stop loss, as an out, one day for a trade here off the $16. I think it was a couple of days later on October 6th. And whatever, some sloppy price action for a couple of days, and then bam, the next analyst upgrade happens a few days ago on October 11th here. So that was just, I believe, Monday of this week. Monday of this week. So what happens on this day? Morgan Stanley comes out, 25 upgrade or initiation with a buy, $25 price target. Similar to Jefferies, right? Jefferies did the same thing, $25 price target. And I communicated to the team here, look, guys, we saw exactly what happened on the 22nd with a very similar upgrade. My thought process is to expect the same thing here. $17 is also a little bit of a level. You can see this pivot point at $17.09. It took place on 10/07 last week off the $16 base. So we communicated a trade versus the stop loss was a pre-market stop loss. There was a little bit of a pre-market area at $16.70 that communicated to be a great stop loss for this trade on this day. And I communicated in real time that morning to the team when it was at the $16.88 that you could get in SoFi right now for about 18 cents worth of risk versus the pre-market level that we discussed. The volume was looking great, and guess what? Bam, this thing exploded. For the second time in a row, it even exceeded my expectations. I remember thinking I'd be super pumped if I could get a move to somewhere between $17.50 and $18 by the end of the day, and it went all the way to $18.50. And then since then, almost similar to the last time it got upgraded. There's been so far 4 days of follow through, and now we're back above $19, and now we're back to, after 4 months or so, almost testing that $20 level that was key post lockup expiration last June. Okay, so that's kind of been the story of SoFi so far. I'm still in it myself. I personally have been, looking for a move into the lower to mid 20s on kind of my swing trade as I, actively day trade around it. Obviously, my game plans are always subject to change based on, what the stock itself does. But basically, I just wanted to go over a little bit about how I view and how I approach markets, where I'm combining understanding the day-to-day news, understanding the qualitative fundamental story, and then utilizing both those technicals and those new events as they come out to act as catalysts for price action, and kind of putting it all together with an understanding of risk reward and potentially an increased probability of success as some of those events are coming out. So there we go. That's the story of SoFi. If you like this type of content here, where we're reviewing technical analysis and we're talking about the story of these stocks, definitely let me know. Give me a like, give me a subscribe, and we can do some more of this. All right, everybody. See you next time. Do you want to trade with me and my team in real time? Right now, we are offering 75% off on your first month of my virtual trading floor at the Pro Desk. Pro Desk is usually $195 a month, but right now we're giving you the opportunity to get involved for just $49. As part of your Pro Desk subscription, you're going to have access to my team's daily pre-market meeting, afternoon meeting, and our daily group Q&A session. So click the link in my description to learn more.